All right. Once again, I'm just going to explain some few things about the business and the new setups you can use. Everyone can use, just depending on the market situation. Then we shall talk about the manual replenishment, manual buy, the importance of buying, where even when you see the currencies have crashed more, even when you see the currencies have dropped in prices, so that one shouldn't worry you. We should just have the right mindset and yes, on how to attack this. The right mindset is really very key, and your patience. So I'll right away go to the bot itself. I can choose, like you can see, this is cost against USDT. Now if I just place on 1 inch, and we look at this setup, this is already 1 inch. Let me just look at something that I've not set before. For example, Acro. Now when you go to Acro, go to my trade settings, then I can make up to 10 margin calls. So let me just reduce here on buying callbacks. Okay, now my first buying amount is 10. Let us count how much money we are spending on this particular pair. It's really very key, and we see how much it is. Let me just look at this. If I'm going to maintain these setups here, because literally we have seen these currencies can usually they can really fall up to 100%. Now if I wanted to spend $350 on this particular pair, $350, I would really come here just on the setup like this. It doesn't matter, but I start with the first buying amount as 10. I don't want to be greedy this time. Let me start with the smallest and see. So when I go to my margin configurations here, so these are my default settings by the robot itself. You can clearly see here from the first 4 margin calls. I think I'll surely maintain this. No, I'll surely maintain these call drops, these margin call drops. Then I can just go and interchange here a little bit. I'll go to 6, then maybe I can go to 8, maybe I can go to 9, maybe I can go to 10. This is 11, then leave a 12 there. I'm simply saying if a currency fall, because from the first call up to the fourth call, this is already 17 plus 6, this is already 23. This is already 33 on a sixth call, 33. This is already 42, 52. This is already 60, 52. This is already 63, 72. Now on this particular case, I'm saying I've just set even when it falls up to 70 something plus. Now I'll just come and slightly use martingale strategy here, because I want to buy more of the goods each time it keeps on dropping. Now remember, I'm using 10 so I can maintain 2. Then I'll just come and interchange here slightly. I put my 3. I'm buying 3 times. Now I'm buying 4 times here. Then here I'll just buy 5 times. Okay, so I just maintain this up to 17th call, but buying more times. So you can see I buy 2 times, 3 times, 4 times, 5 times. Now on this particular pair, remember this is $20 on the first call plus the other 10, that is already 30. 30, then we have plus 30, 60. 60, this is 110. This is 150. The whole of your capital spent here is 150. And now if you come and you're saying it's going to fall up to these areas, I can decide to buy 4 times, 4 times, 4 times, but I leave those 4 times. This is 4, this is 4. Now so you can imagine, so I'm simply saying this is around I'm simply saying on this particular pair I can spend close to $350. That is if it falls more, but basing on just the setup I'm using. So it depends on how much money I have. So that is it. Then I'll come and confirm it here. I click save. Then when I click save, I cannot forget of course this. I can't forget of course this. This is the Sabine mode real-time settlement. Then confirm it. So after I confirm it, I'll definitely come and click here on start. Okay, when I start in Binance, it will start working, but just bear in mind that you can see the setups here very clearly. This is what I set. Okay, then let me just check in here my buy and callbacks. That is okay. Sub position take profit ratio, you can decide maybe to change these ones to whenever it goes to, whenever this goes maybe to 1.1, you can just interchange there, or you can leave it at 1.3. there is no harm. I'm just trying to unleash setups like this. We usually adjust these setups depending on the market situations. So you can see this is setting, it takes me up to 70-something%. That is what I'm saying. So I just maintain this, but on the first 4 margin calls, I'll maintain some little bit of martingale strategy here, because each time you're buying more of these, I just found out that you make a lot of money when the market is going up. Actually, this is the first setup I tried using, and it was bringing results before I learned about that you can have from the 5th margin calls and onwards. So that is simply the setup you can actually try out on your own. For some of those currencies that are volatile, if you see SHIB, if you see COS, if you see 1 inch, those smaller currencies, I usually basically say because they are too volatile, they can fall anytime. That's why I'm really maintaining these margin calls that I just add on my percentage drops here, because of the high volatility they have. I just want to remain in the market instead of reducing here so much. So I'll maintain what the robot has, just interchange slightly and leave it. I don't want to be greedy, because if you reduce here 0.1, you put like we put 2 or 1.1 or 1.1 like that, or 0.5, 0.5, then before you know, you've already fallen in the 5th position. Before you know, it has already exhausted all your margin calls. So we can just a little bit maintain of that and remain in a market for a very long time. Now, the importance of manual replenishment is very simple to understand. Like you can see on this, very situation. Let me just look at this. Now let me just click on SHIB. You can see SHIB. Now if you realize that you realize the averagely I bought at this price, 52.91, but you can see the current price. There is really a very big crash here from 52.91 to 32.53. So if I wanted to do a manual replacement, that is the manual buy here. I can buy this currency manually to reduce on the average price. Remember, you do that by stocking more of the goods. When you stock more of the goods into your shop, you're simply reducing on the average price you bought. Just relate this to your local business at home. Whenever your local business is at home, the local trade you do, it's entirely some of the same thing. Now, when I click on manual buy, I want to see if I can reduce on the average price here. The average price I bought this, it is here. You get it? Now, for me to realize the profit here, for me to realize my profit, all of it, to bring back my USDT, the price has to go above this. So I might not want to wait up to this particular point. I will simply come and do the manual buy here, but I can even use the market price or slightly lower it down. I can even set it here or leave the market price that is there. Okay, now when I come there, it depends on the amount of money I have. Let me see if I'm adding in more $300. I see, can I reduce here? Let me add in my $300. 300. Guess what? If I'm adding on $300, you can see my average price reducing so much here. Okay, now I am not going to wait for it to go to the average price I bought, because I've stocked more of the goods, so it will just slightly go above 37.22 and I'll pick the profit because I've stocked more. After that, I can click confirm. When I click confirm, it will trigger the price I'm buying. You get it? So I just wait for it to go above 37.22, which won't take a lot of time for me to get the profit. I don't know. I think you've understood that. It's just an illustration. So we always need to have some capital to cater more for the dips in case the currency crashes. You can take full advantage of this by buying manually. So I guess that one is clearly understood. So with this business, you just need to be creative and you just need to add some more capital whenever you see such situations. So with those few things and few words, I guess you've understood somehow. Thank you very much. Thank you very much. You've really been a good audience. Thank you.